Well, hello, this is Hall Martin. I'm with Investor Connect. Today we're with Chris Marks of Blue Note Venture Capital. Chris, thank you for joining us.
Thanks for having me.
Great. So I've just come to learn about Blue Note Ventures. It seems like a really interesting group. Can you tell us more about it as far as what you guys do and how you invest, etc.?
Sure, I'd be happy to. Blue Note Ventures is an early stage venture capital fund. We're located in Boulder, Colorado, and we invest in great technology companies, and we try and serve entrepreneurs who are committed to what we call authentic leadership. We're looking for early stage tech companies, kind of broadly speaking. We do a lot of software, a lot of B2B software, enterprise software. That's kind of our roots. That's what we've been investing in for years. But we look at everything. We've done a little bit of hardware, a little bit of consumer facing. We started investing. Myself and my partner started investing here in Boulder, Denver market back in 2000. We had a private investment company. From there, we managed two funds for the state of Colorado. So we did the majority of our investing in companies that were based here in Colorado or had some strong tie to the state of Colorado. So as a result of that, we became truly generalists, just enough to be dangerous. And then a couple of years ago, I launched what became Blue Note Ventures, wanting a little bit more focus on pure technology and a little bit more emphasis on the type of entrepreneurs we invested in and partnered with. So that's what got us here today.
Great. And so what do you look for in a startup when you're evaluating them? What's kind of your criteria?
Well, like a lot of early stage in the technology space, we're looking for disruptive technology. We're looking for companies that are trying to disrupt big markets by addressing an unmet need or creating a real significant efficiency that's not there today. So a lot of the same stuff. What we really emphasize, and I think what's maybe a little different about us is, that the teams, the founders that we're talking to, founders that we tend to gravitate towards are what I just kind of grouped under this heading of authentic leadership. And that's really, it goes to more than just who they are as leaders, but it goes to what type of company they want to create, what kind of culture they want to create. And just, we believe, and when I looked back at the last 15 years of investing that we'd done and what had worked and what hadn't worked, and truthfully what had been fun and what hadn't been fun, we found that people who really tend to create these cultures of transparency and trust tend to attract better people. They tend to make better and quicker decisions. The companies tend to be more aligned from the management team perspective. They tend to take advice better, so we could maybe add a little bit more value as investors. And we just thought all of that kind of resulted in a greater likelihood of success for the company. So we decided to wrap that into our investment thesis, and we take that side just as seriously as kind of the traditional, what kind of technology do you have? What kind of market size are you going after? So we weigh all that in our investment criteria.
Well, I understand you recently have a new portfolio in the Texas area. Maybe you could tell us more about that opportunity and why you invested there.
Sure. Yeah. Like I said, we're located in Boulder, but when we kind of broke away from the funds that we'd received from the state of Colorado, one of the reasons was to invest in other markets as well. And we're not trying to necessarily insert ourselves in deal flow on the coasts, although we do have some network there and have done a couple of deals there recently. But we're looking at a lot of these other markets all over the country, like Boulder and Denver, Chicago, Austin, Seattle, Salt Lake City, and recently was introduced to a new company in Austin called Zen Business. Zen Business is a mobile-first platform for corporate entity management. So day and age of everyone being their own individual business, this is a platform for creating a new legal entity, compliance tracking, corporate identity protection. You can sign up a registered agent. You can track your credit. Ultimately, they want to go into such things as loan qualification and other services. So it's really a full service platform for kind of the sole proprietor or small business owner. And we're excited about it. And when bringing it back to our kind of authentic leadership criteria, is a company that was started by Ross Burdorf. Ross was the original CTO at HomeAway, a very successful Texas startup story and big company story. Ross was there the whole time until the company was sold to Expedia. So a lot of experience both in the early stages. And so we're really excited to be partnered with Ross and be part of that venture down there in Austin and to get a foothold down in Texas. The only way to get involved is to kind of plant your flag there and start investing. So we're excited to be in Austin.
That's great. I think you'll find many more companies in the area that meet your criteria and authentic leadership. And that's a great model to think about, is how transparent and so forth. How do you judge that or assess that? Is it just walking around the office? Is it interviewing everybody related to the company? But how do you really come to a detailed conclusion on that?
Yeah, it's hard, and that's a work in progress for us. And one of the things that we wanted to make when we set out to find authentic leaders, it's not our decision who is one and who isn't. We're not out there to kind of judge other people, or what we wanted to do is kind of model that relationship and how we interact with the portfolio companies, and that we try and create full transparency. We try and stay aligned with the entrepreneurs, and we try and be a good sounding board. And a lot of it is attracted to that model. But even more specifically, when we were coming up with the thesis, we looked back and we did this kind of, at one point we had like 300 traits on a whiteboard in terms of what we thought were important traits in successful entrepreneurs. And over time, we just kept whittling it down, and we landed on 4 or 5 that we thought were kind of really necessary to be successful in building a startup and building this type of culture. And so, we use those as kind of, measurement points. But in terms of process, spend a lot of time at the company. We try and get to know the team, both professionally and personally, and watch them interact and try and understand their vision for what they want to build and why they want to build it. It's definitely an art and not a science.
And aside from authentic leadership, say people pass that, do you have any sector, stage, or other filters you're putting on these deals? What do you look for after that?
Yeah, this first fund at Blue Note is a small fund. So we do, early stage seed deals. We like to get into companies ideally in kind of that first institutional round. So a lot of the companies we work with have been angel funded or friend and family funded, but when it comes time to syndicate a true institutional round, much like Zen Business just did in Austin, they brought in this round 3 or 4 venture, seed venture funds. That's when we like to get in. From a timing perspective, our initial investments tend to be not very big, partially because of our size and partially just because at that stage companies don't tend to need a lot of money, and we like to syndicate with other investors. So I think our average initial investment is between $200,000 and $300,000. The difference, I think, between us and a number of other seed funds is we really do intend to invest in, at least 2 or 3 times. So we're not out there writing a ton of checks and just hoping one company hits it. That's a very good strategy. It's just not one I've ever been very good at or enjoyed that much. So we tend to try and participate and help them syndicate at least the first 2 or 3 rounds, which tend to be hard rounds to get done in some of these more secondary markets. We don't necessarily lead them, but we like to be able to participate and kind of consolidate our capital where we think we're into something, that could be a good win for us. So that's kind of our criteria on that front.
And what direction do you see yourself growing in the future? Are you going to continue to spread across the USA, or are you going to, do follow-on rounds with the current deals you have and double down on those? Which direction do you think it might go?
I think a little bit of both. I mean, I think, you get into a market and you start building network and you start seeing more deal flow naturally. And so I think the markets where we are, we'd like to continue to grow our presence. I think we'll probably start raising fund 2, which will be a little bit bigger of a fund next year. And so we'll have a little bit more capital to spread around. And I think we'd like to stay in these same markets in terms of, not missing anything in our own backyard, which we consider Boulder, Denver, Salt Lake, but also focusing on those other markets, which are, Chicago, Austin, Seattle, Portland, Kansas City. We've seen good deal flow. I mean, there's just a lot going on. Accelerator networks and other things that have been built and are in place. We get pretty good visibility into those markets. So we're excited to keep trying to build a presence in those new markets and stay focused on what's going on here at home.
Great. What are the trends you're seeing among the startups coming up that you're seeing? Are you seeing any new trends that you haven't seen before? Are they prepared, not prepared, in the right industry, the wrong industry? If you had to start summarizing some trends you're seeing out there, how would you characterize the deal flow you're seeing today?
Yeah, that's a great question, and it's always changing. I would say that there's a lot of deal flow these days, just in terms of quantity. I would say there's also a lot of capital out there in the very early stages. So I think probably a lot of things are getting funded that maybe wouldn't have gotten funded a year or two ago or 3 years ago and may get funded. But there's just a lot of companies who are able to pull together that first, $500,000 to launch and become real and give something a shot, which is great for the overall ecosystem. And I think, then there's kind of a sorting out at that next level, kind of institutional capital comes in like ourselves and other seed funds. And there's more for us to sift through because more stuff has kind of gotten to the point where it's attractive to us or has gotten to that point. So I think a lot of deal flow. I think pressure on valuations overall. It's not as crazy as it is maybe on the West Coast, but our average, initial valuation has crept up over the first couple of years of doing this fund. And I think that's just reflective of the overall market. If you're an experienced entrepreneur in particular, valuations, you can demand a higher valuation in this market with the amount of capital that's out there. So we've been feeling some pressure on that front. And then in terms of kind of sector and whatnot, it's very spread out. We're seeing, like I said, our focus tends to be on kind of B2B enterprise software. We're seeing a lot there, but we're also seeing a lot in kind of healthcare, tech. We're seeing a lot, obviously in kind of automated home and, IoT and all that stuff remains very, very hot. But it's very spread out, and I think that's a sign of a healthy market. And we're hopeful we can kind of stay in this zone for a while here with public markets at least cracked open, healthy amount of capital in the system, and lots of deal flow. Feels pretty good for those of us in the venture industry.
Yeah, there's a lot of opportunity out there, and you talked about your criteria being authentic leadership and so forth. Is there any other criteria that helps you select through the the large number of deals that exist? Is there anything else that becomes a lead indicator for you to go and look at it further?
Well, when we get through the kind of initial analysis of the market they're going after, and we feel good about the team, those are the two big pillars for us. Outside of that, we, like I mentioned earlier, we like to syndicate all our rounds because what we found in this market is if there is a lack of capital in these kind of secondary markets, it comes in that Series A round or early Series B where they're looking for people to write kind of $3 to $5 million checks. So one of the criteria for us is to get on board early with people who can with other people who can write additional checks. So syndicate becomes an issue for us. We obviously do all the analysis around, who else is in the market, who's going to be their competition. But really, a lot of it is do we believe that the people we're partnering with can solve and overcome all the inevitable challenges that come with starting an early stage business that you can't really even identify when you're investing at this stage. So it's, are these the type of people who are going to be able to get over those hurdles and react quickly and make the right decisions under pressure and be efficient with their capital and attract the right people when maybe they can't pay them as well as they should, and all the things that kind of go into building a successful company with limited resources.
Great. Well, that's a good rundown and a good reality check. Can we get syndicate people to join us, and some of the other check boxes to make sure this is going to go the distance and so forth. Is there anything else we should talk about in the last couple of minutes we have here that we haven't covered so far?
No, not really. I would just encourage people if they want to get in touch with me or talk to someone at Blue Note Ventures. We'd love that. We're as I said, network is everything to those of us who are out there trying to find exciting deals and get our capital to work. So please feel free. I can be emailed at chris@bluenotevc.com, or you can contact me through the website, which is also at bluenotevc.com. So, I appreciate the conversation and look forward to continuing to build some relationships in Texas and elsewhere.
Great. Well, thank you for joining us, and we'll put in the show notes those email addresses so people can get back in touch with you, and hope to see you here on your next trip down to Texas. It looks like you have a great thing going there already, so looking forward to catching up next time you're in town.
Great. Thanks, all. I really appreciate it, and I look forward to seeing you